Okay, we got to talk. What the F? How is Wolfspeed higher by 1,734% today? And then another 9% in after hours. Whoever bought this stock must be loving it. They're probably making so much money today. Wolfspeed, woo! Actually, for me personally, this turned into a mistake today. And I'm going to walk you through exactly what that means because if you want to be an investor, you have to learn how to manage mistakes. I know that sounds a little bit weird, but I'm going to explain all of it today. I have a very long and detailed update for you. So if you heard about the stock through this video, I'm going to present what I am doing right now. First things first, let's talk about the S&P 500 because we formed a higher low, we formed a higher high, and we closed above yesterday's high. So what does that mean? We're back to 4 out of 4 bullish. We got back above our daily higher high and closed above it. So higher lows are sufficient now. That should say for the daily here. So on the daily, the weekly, the monthly, and the annual, we got fully bully boomtown by L dips. On the daily, the weekly, the monthly, the quarterly, and the annual. So how'd you manage to make a mistake? Aren't you a YouTuber? You guys never make mistakes. Well, actually, I do make mistakes, and I try to learn from them. I call those lessons. If I don't learn from them, I call those failures. If that does not entice you today, please click off because I'm not a perfect human being. I make mistakes. So if you like making money, though, oh my God, look at this one here. QMMMM up by 2,000% in the last month. Casually up by 8,744% today. How? Well, because this one's not normal. The SEC halted it. Why? Well, because it rose by 959% on the crypto plan. These numbers sound so crazy, don't they? 1,734%. Yep, that sounds crazy. Why isn't it halted? Again, I'll talk about that a little bit later. It's because there was a restructuring. The company was in bankruptcy, and we'll talk about it. This one here was more of like a pump. Why? Well, look right here. Read it. QMMM stock surged by basically 1,000% when they said that, hey, we're going to sell some cryptos, and then got pumped on social media by unknown persons. But the stock is going to start trading back on the 10th. So this basically means, right? No. But I don't know about you, but when people say don't panic, even if it's yet, what do I start doing? Oh boy, I start sweating bullets, right? I'm like, oh, I'm starting to get a little bit worried. Yeah, I got a little bit of sweat coming down here. I don't have the meme ready yet. There you go, right? Yeah, I'm dripping, I'm sweating. Well, that's exactly how I'm feeling sometimes. I'm like, well, yeah, don't panic, don't flee, right? Don't panic. The bubbles are here, but don't worry, or maybe not. This is the part where the emotional whipsawing can be very challenging. If you go to the link in the description, and you can go here and click on these topics, what it's going to show you is everything that I talk about in my videos. And again, I like to learn from my mistakes. So this feels a little bit too easy, right? Euphoric. We're going to be geniuses. This is, oh my God, I got to buy more on margin. When stocks go up by literally hundreds of percent in a matter of like a day, like in a month, 2,000%, this is a $7 billion company. That's a little bit crazy. Yeah, it's a little bit crazy. Don't panic, right? It's 2007. The party's still on, but don't panic. Oh my God. I got all these bad feelings here. Then I read a headline like this. Wowzers. DeepSeek debuts sparse attention method in next-gen AI model. Okay. And now they have a new cost update here. The U.S. companies are trying to catch up, but wow. OpenAI had an announcement today as well, and so did Claude. They actually announced an update to their model as well. So this AI model is starting to really speed up. It's making some of the use cases from before quite viable. I don't know how much juice is in the tank here, man. When I think stocks are extended, they can go higher and higher. Why? I tend to get in early and get out early. That's just who I am. I tend to be late. Why? I like coming to the party late. I like leaving early. Okay. What else really matters for today? So let's go back to Trello. Oops. Let's go here to Troll. Yeah, Troll. I'm sure we got some of those on the video section today. I don't care. You guys can say whatever you want. Why? I'm a man. I'm here to make the best out of my life. I'm not perfect, and maybe you will appreciate that. Maybe you won't. Going into the rest of the week, tomorrow we have, tomorrow's the monthly candle close. So we have monthly candles closing out tomorrow, notably invest alerts. I talked about some of those on today's stream. You can click on that at the very end. Otherwise, I think it's really going to be whether or not Trump and Lula have a call this week. I think they will. What date? That part I don't know. There's a lot of stuff coming up here into October, though, like notably these meetings here. There's the Canada and the UK. Then there's Kuzma later in the month. We got the G20. We got the B20. We got APEC. we got Exposibram, we got the G20, we got COP. Man, what's all the stuff? What are all these acronyms? And we're going to find out between now and then end of next month. Do we really need anything else on the S&P? Easy dollars. If in doubt, buy the dip. Even if Justin's a wussy, which will look like it was support last week. Yeah, I'm a wussy. I don't care. I'm at least I'm alive, and you'll see that in today's video. Fully Bully Boomtown by L Dibs. Gateway to the Bears 654.4. I will tell you this: if that happens, I'm gonna flip like a flapjack. Why? It's my plan. It's premeditated. I know exactly what to do. Here's my alerts right here. I'll show you. It's set. I will tell you if it happens. If the S&P crosses during regular trading hours at 654.4, that means the message is it's going to print a lower low. I will get that notification and I will share it with you on the first video that happens. What that alert basically means is this: that not only is there bearish evidence of a potential topping pattern, which are failed breakouts, again, potential topping pattern, there's evidence of us actually going down. It's really simple. If we go down a little bit, we could go down a lot. What's more than likely going to happen, just to make the video shorter so I can get to the next part here, is that we're going to do the same thing we look for every week. Is the daily going to break? Because the gateway for the Bears, from my perspective, so we don't flip-flop every day, we flip-flop every other week if we need to, is 654.4 be the weekly lower low. The daily could break first. That'd be fairly easy. And the reason why it would be notable, oh yeah, my name's Justin, and I walked into I walked into a door today. If you want to find out more about that, stay tuned. I'll tell you all about it. That was the joke that I had queued up. I forgot about it. Going here to the one-day chart. Look at the low of the day. 661.86. Okay, cool. If we look at the pink line, pink is important. It's a pivot. All right, 661.72. What would happen tomorrow if we get a black eye turn into me, right? That eye's already all beat up, right? We'll find out. This eye doesn't look so bad. Well, maybe we got another black eye coming. Higher lows are sufficient. So if we don't hold the higher low, again, second link in the description, go to the recipe here. We're going to make some nice bearish cupcakes. If what? We print a lower low and then close below it. Last week, we got really close. It did not happen. If we go here to the weekly chart, we actually printed a higher low. That's why I'm looking forward to it this week. So last week, we look at the L. I'll hide everything so it's a little bit easier. Looking at the L, 654.3, 654.41. Oh my God. When we land on support, sometimes it does not feel like support. That's exactly why people sell into it. They don't know it's support. They're like, oh man, I feel bad. I don't want another black eye. There you go. All right, jokes are over. Let's move forward. We got through that, got through here, talked about the agentic stuff. We'll get to the rest on the stream tomorrow if we don't have a chance to get to it now. So how'd you manage to lose money on this, Justin? How much did you lose? For every 150 shares I had, I got 1.25. So I casually got diluted by like basically 99%. And I'm casually down by 90% on this position. I'll explain exactly what that means here. So here's what happened. I got converted. The ticker name is not going to change. I got removed. So if you need to pause, they removed 150 shares from my account and they added 1.252 shares. That's the new QSIP or ISIN, which means basically the new registration number for the company. Today, they announced a restructuring, and it's going to be self-funded through free cash flow. But the important part here is that they basically cut all their debt. They had like $4 billion in debt, something like that. So how are they going to survive as a company if there's no company? That's the whole point. Equity investors or stock investors, or if you own stock like me, we're the first people to get wiped out. We're the lowest on the cap table is what that means. So it is a merger of Wolf, and we get a removal and receipt of new shares. On the 10th, they're going to delist the old QSIP. In your account, nothing's going to look different. If you buy the stock now, it's no different than buying any other stock. In my position, here's what happened. All right, value still pending. I'm down 90%. So what the fuck happened, Justin? How'd that happen? Well, it's right here. You can see I lost 2.9% of my portfolio from that one single stock today. I'm going to explain exactly what's going to happen too. But since your time is valuable, right around the 10-minute mark, normal video, this is what I'm telling you I am going to do again. This video is like a vlog. I'm not telling you what to do. I legally cannot. I'm not a financial advisor. I'm telling you what I'm doing. And I think with transparency, and like I said in previous videos, is a doctor going to take his medicine? Because Justin says that transparency makes him a better trader, and that doesn't sound like a really good thing right now. I'll show you why it actually is if you can watch all the way till the end. I'm not going to buy or sell Wolf. The reason why is My mistake was buying on Friday. Otherwise, I knew what could happen. My plan is what saved me. I'm going to discuss that right now. I was prepared to hold on to whatever I bought back because if you look here again, I funded the current position I have. So yeah, it's down by 86% and doesn't feel so hot, but I've realized 309 in profit and lost 166. That's very important because I'm buying back, right? I'm giving back profit. I had a false sense of security, right? Justin's a know-it-all. He's so smart. He's a genius, thinking I understood the bankruptcy and that the reorg was priced in. Clearly, I was wrong. The co and thesis are still valid. Buying fresh here is likely a smart move. But me personally, I tend to make emotional mistakes after things like this. The emotional cycle I showed you before. I gave back half my realized profit in the current unrealized loss overnight. If this stuff is starting to confuse you, you really need to watch till the end. But again, just kind of skip over this part right here because it's the risk management jargon. I'm not going to give back more. This position is still a win. Let's leave it as such. Why? Look, crushed that trade. Crushed it. This bankruptcy paid us. So let's make sure we just understand what's happening here. Leaving the position in my portfolio as a visual reminder of respecting the risk. Remember, when I told you I blew my accounts up twice in my 20s, I said, let's start with a small account because if we're going to make mistakes, the mistakes will cost us less dollars. So yes, percent-wise, it stings. It's very painful. I'm still crushing it on the ear. But this account is literally my sandbox where I plan to make mistakes. That's literally what I'm doing. That's a visual reminder for me now because honestly, everything's just been so easy lately. If you look right here, I'm still up an average of 62%, even with some new purchases like Zoom and Berkshire. Tilray's up like 50% for me today. So if the sizes were the same, I would be probably up. No, I wouldn't be up, right? I'm not that good. All right. Anyways, I'm still up 62% on average. I'm still open back to profit now at 0.1%. That's things though, right? Negative 2.9. Ouch. Yep. Ouch. Reminder, if you lose money and don't learn, that's a failure. If you lose money and learn, that's a lesson. Remember that Einstein quote? All right. So what happened to Wolfspeed though? Why didn't it sell off 90% on Friday? That's exactly what I thought. So I asked the robot. Here's what the robot told me. Bankruptcy, because of bankruptcy mechanics. Equity traders trade on fundamentals. Well, that's what I was doing. Okay. Until the effective date, the old Wolf, which we saw through the merger, stock was still trading. Even though filing said equity holders would get 3 to 5% of the new company, I even knew that. The old ticker continued trading. Some traders, speculators either ignored, didn't read, or didn't believe the plan. Others just played volatility. Okay, I was playing the volatility. Okay. Number 2, the actual conversion ratio wasn't locked until emergence. The plan gave a range of 3 to 5. The final allocation of 3 only crystallized the effective date. Brokers and DTCCs only adjust after the court certify emerge. Exchanges do not pre-adjust stock prices. And it was a wipeout of 95 to 97% post-merger or post-print. They halt trading, cancel the old shares, then issue new equity. The price step down happens mechanically in your account, not on the market before the event. So that's what I showed you here. I was buying on Friday, right? What an idiot I was. Idiot sandwich. And again, the mistake could have been way worse. I'm taking this in stride, and I'll show you the reason why. So again, exchange did not pre-adjust. Why the market didn't fully price it in? Many retail buyers simply speculated, hoping for a squeeze. Some thought of a last-minute change, right? 5% versus 3 could boost recovery. That's what I kind of thought. Liquidity was thin. Wasn't really thin. Liquidity was huge. Price discovery was inefficient. It wasn't efficient. Bottom line, administrative at emergence. All right. Why wouldn't market makers or hedge funds short the shit out of this then? This seems silly. In a clear, rational market, yes. Oh, the market can be irrational. The stock should trade down to reflect the 90% dilution, but in Chapter 11 cases, many mechanics prevent that. Uncertain final recovery until the effective date. Okay. Borrow constraints. To short, funds must borrow. Oh, in the USA, you got to have real shares to short? What a crazy concept. When a stock is about to be canceled, borrowed, or availability dries up, lenders pull shares or hike borrow costs. Maybe they were covering on Friday, happily buying our shitty little shares from us. That's right. And we'll see whether or not YouTube gets angry with me getting a little bit more colorful with my language today. It's not supposed to, so we'll see if it does. With only days left, Borrows can cost 50 to 200% annualized. For a quick trade, that's unattractive. Corporate action risk. If you short when the shares are canceled and converted into new equity, your broker has to deliver the new securities. All right, short into reorg. They don't do that. Missteps here can be expensive. Speculative demand from retail algos. What happened with Hertz? And that was kind of what I was looking at. I'm like, bankruptcy is not really that bearish, is it? Well, clearly, again, I was wrong. I don't know everything, believe it or not. This is a very expensive lesson. Scale the trade with a $200 million cap post pre-arc. So if now we go to Wolf stock, here's the difference. The market cap is now $3.46 billion. So the new share price basically reflects the entire company. And Apollo and other firms have the value of the new company now. That's what it is. It's now not a $200 million company, which is what it was pre-org. Post-org, now it's 3.46. The share price just reflects that. They just happen to steal. Again, it feels like 99% of your shares are just like, yeah, for every 100 you have, I'll give you a little crumb here. Here you go. Here's a crumb. Hope you enjoy it. Remember, the bondholders took nearly like a $4 or $5 billion wipeout too. They took a huge haircut. What? Basically the equivalent of the company. So they lost $4 billion. Right? Lick your wounds, move on. You got a black eye. So the F what? Okay. Doesn't make me feel better, but at least now I understand. Bankruptcy 2 months ago is bankruptcy 2 months ago is what gave us our lift, like Hertz. Got it when it went into Chapter 11. So it did pay us, right? It's a great trade. We made 3% on the account, and we have a free position from Wolf, even if it looks bad right now. So we gave back profit from not understanding the mechanics. That's okay, right? I'm not actually perfect. This is a great reminder to myself. It's part of why I've been reducing my account so aggressively. I felt like a black eye was right around the corner. I did not think it would happen in one day. I did not have to think it would happen with my favorite stock, right? Oh, has a sad eye right now. Yeah. I put half my realized profit into a YOLO. YOLO wasn't working out right now, and I'm going to keep it as a reminder. Are we able to admit we're wrong as we trade? If you cannot, we're going to repeat the same mistakes over and over. That's called insanity. Doing the same thing over and over, expecting a different result. If you are able to admit you made a mistake, you are less likely to repeat it. It is not a guarantee. Buying can make up for the problem. It could also compound it. Why the regret more is what I'm focusing on here. I am going to regret that it goes lower, right? Like if I do not sell and it goes lower, I'm going to regret that more than if it goes up. So what does that mean? What do I do? Well, I was planning to go up to 7%. So I'm not doing that right now because I'm worried about number one. So what am I going to do? I need to pause before I do anything. I probably have to see a new monthly candle. All right. I'm going to be a wuss. I was going to buy some more on Tuesday, which was last week, and add on the monthly candle close. So I would have bought on Tuesday, but I would have avoided the purchase tomorrow if I would have respected my original plan. Again, keyword there being respected the risk or my plan. I would have been much better off. I need to at least sleep tonight and come fresh tomorrow. Why? I know I'm at risk of making a mistake. I could have bought more today, would have been up. That's perfectly fine. They can make money without me. I don't need to be in there catching every Pokemon every day. When I look at my system here too, again, like it is up 1,400%. The Algo called it. What I didn't know it was calling was a reverse split, basically. Yeah, 1,400%, 953. But the difference now is that we have to think about what account this is in. So if the stop is actually 0.01, it means basically zero. Target 67. Well, yeah, like we're getting closer to 67 now. Here's the difference. Stock does not change. The stop does not change. So what do we do? I already effed up once. Pretending I did not F up will compound the problem. If it fixes itself, I will get rewarded for bad behavior. So, like Einstein says, anyone who has never made a mistake has never tried anything new. I made a mistake. I am so sorry. Why? Again, I'm trying to make a bit of a joke here, but it's best to try to think about what you could actually do if you are doing well or not doing well. Again, you're going to make mistakes if you trade. You're not going to hit home runs on every single stock. So if the goal is to be profitable in the long term, or is the goal to pretend we are incapable of making mistakes, right? We're like some kind of stonk god, right? We're the stonk slayer. Everything we do is just great. Conqueror of all things, conqueror of the galaxy, nor of all things, right? Incapable of our farts or perfume, right? Everything. Men don't like admitting they're wrong, right? No, they don't. Well, men should understand this too then. Compound interest is the eighth wonder of the world. He who understands it earns it. He who doesn't pays it. So stick your tongue out, have a little bit of fun. Life is short. Sorry, I made a mistake. So I always tell others, pretend if you had cash instead of the stock, would you buy it again? In this case, I would. And I'll explain the reasons why. Growth plan to leverage installed, again, keyword there being installed, 200 millimeter capacity, which will be self-funded through free cash flow generation for silicon carbide. Well, that's sick. Yeah, that is sick. SIC sick. Okay. We firmly believe, okay, well, they're gonna pump themselves up, of course. So unwavering support, confidence throughout the process. I don't care about words from management. It's nice they have them here. Who are the key drivers of our success, as well as our customers? That's Renaissance. Okay, so they have a $2 billion supply agreement. They converted that into equity. Here's all the companies named as well, right here. Advisors. In connection with the emergence of blah, 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 they've announced 5 new director appointments. Here's some advisors they have. I'll try to find out who they are. I just asked the robot. So again, robot can't make mistakes. So again, don't take everything I say as being gospel. I'm not actually as smart as sometimes I think. Today, I'm getting a reminder of that. I'm just looking here to who they actually are with. Legal counsel, advising Wolfspeed. There's a Renaissance guy too. I can't see it right off the top of my head. Just for time, it's already 21 minutes. I'm just going to push forward. So as a reminder, fundamentals tell us what go on the watch list. Technicals tell us when to buy and sell. Technically speaking, again, I was doing research on the weekend about silicon carbide. It's sick. I like it. I was asking it. Where can you find SiC or semiconductor grade at 99.99 or 4 Ns or higher? The list is not exhaustive, but here's what it gave me. Here's where we can get it. Known producers, suppliers, and their locations. That's the question that I asked. Nice. SiC. Wolfspeed. Yeah, they produce that SiC. What is it? 99.99 purity. The strength in the SiC wafer and device manufacturing. That's the reason why I originally bought it, to be honest. Okay, so if the reason why you bought it is that it's unique to the United States and there's NCE, offers SiC powders and purity grades, 99. So there's 4 Ns, there's 5 Ns for semiconductor use. Oh. And there's Japan, Germany, China, Germany. Okay. So what does this basically mean? It means it depends on when you bought it. Fundamentally, this is why I bought it. So fundamentally, there's a reason why I liked it. Technically, what does the algo say? Well, it depends on your account. Remember, even back to September 19th, 10 days ago, I said, it depends on your strategy, which means your account. For a retirement account, it should be lower risk. In a tactical trade account, it's going to be very risk managed too. So what does the algo say? Well, 1 cent is the stop. So whatever risk on your account is what your position size should be. So when I bought 3%, I knew exactly what risk I had in my account. 3%. Because the stop loss, I had it here at 64 cents. That's where my buy zone went down to, but I was prepared to hold on down to 0. So I can only lose the value of my position, which was 3%. That's a new thing I learned recently. 7% is the max. I like to average up for my last half. So thank God I didn't go to 4 or 5 or 7. I would have lost all that too. So the stop is essentially 0, not 90% like we got overnight, right? That's just the black eye. You're like, oh, I'm sorry. My eye is so sore. No, that's 100%, all of it. So yeah, I just didn't think it would happen all in one night, right? Overnight. Pew. Yeah, that stonk got fired. So here's the difference. All right, you done goofed. All right, cool. So what can you do? Sell for a tax loss if you want to. This is a registered account. It's not going to help me. It won't matter. I would purchase it again new. So again, this is a meme. You done goof. So what are you going to do, right? Derp. 2 times the realized profit that I have in the unrealized 0.4%, which is currently funded with real profit. Okay, 18.3% on the year. Let's, if in doubt, zoom out. With my plan, I would have likely saved me an extra 1%. It'd be at 19.3. But if I didn't buy Wolf at all, I wouldn't have the gains to give back. Also, we are lucky the stock actually ripped on bankruptcy so much. before it tanked. Well, I kept trimming and trimming and trimming. What if we didn't get those trims? If we would have just hodled, this loss would have been significantly more painful. I would have said, man, I did it again. Then respect the risk. It was 7% and I lost it all. Or it's 10% and I lost it all. Or ride or die, like Cool Man, you'll see at the end did. I'm like, oh no, 100%. Let's go 50, 70, margin up. Let's go. I'm a genius. It's $1. Let's go all in. So great for Justin. What about me? I am not able to tell you what to do. I'm going to pretend I'm speaking to myself right now. Why? Just because. I don't want you to say that, oh, Justin said. There's going to be consequences. It will never be the same if you do that. So great for you. What can you do? Well, the question is, can you admit you made a mistake? Is it more important to pretend it didn't happen, or do you want to learn from it? If you're still watching now, I'm guessing you want to learn from it. So would you buy the stock again if you don't own it? So if you had cash instead of Wolf, and what are you going to regret more? If you don't own it and it goes and you buy it right now and it goes down to a cent, are you going to be okay with that? Or will the consequences never be the same? I would be putting myself in the dungeon. I would be putting myself in timeout if I did that. That's a big mistake for me. I don't want to do that. So, of course, I regret that the stock is now going higher without me and I got my high average. Of course, I regret that. The question is, what will I regret more? And if I do own the stock, it's like, well, man, if I sell half, like I'm realizing a pretty big loss here. I get 0.2% of my account back. And if it goes higher, I'm going to regret that now a lot. Why? I still like the stock. So remember, I actually laid this plan out publicly and I created this card on, I don't know, like I forget what day it was. This was one of the ideas I actually shared. It's right here. I talked about SCDG. That one worked out great. Sometimes I'm not so great. Here we go. I made this card on, when did I make it? On the 10th. So I gave you a plan like 3 weeks ago for free. And in a free video update today, I'm telling you what I actually did for reals. So here was the plan. Did I respect it? Is the doctor taking his own medicine? Well, this is what I said it would do at $1.45. I said, why is it on the watch list? Sick. Algo risk reward, 30. It's a whisper. Due for follow through on an algo alert. Time frame. Invest. Or a 12-month idea. All right. Invest whisper. Buying the last day of the month. That part I didn't listen to. Why? Different strategy. Catalyst for here. American SIC production. They just told us we're going to have free cash flow. Well, that means there's probably an update on the agreement. Cool. So what do we do? Well, clearly I'm surprised, right? I can't tell you what to do. I'm just sharing what I'm doing. And sometimes it sucks. Right? 2-to-1 is good, but the sizing is what really matters here. You have to be ready to lose 100% of whatever you buy, Justin, by default. Algo positions are 1%. You know that, right? So this is a whisper alert, which means we're not buying more than 0.5%. Again, we add on the follow-through alert. So we enter with the whisper and we add on the follow-through alert. We would not be buying 100% of our account. We'd be buying half of 1%. What is that? That's basically a YOLO. Invest in what you understand. So here's the skinny. In my retirement account, I'm waiting. I'm going to be a wuss. In my Algo account, I'm going to assess it. Why? I need to sleep tonight. I can't make a sound decision, and I don't buy till tomorrow anyway. My original thesis was pretty simple, though. It's this. I like SiC. I like silicon carbide. 10-year supply agreement with Renesas. Silicon carbide is on the DOE critical mineral list. And here's a screenshot. I asked the robot on the weekend. Sure, I asked it, hey, could we get some of that sweet DOE money that the Intel got or is like someone else got? They're like, yeah, it's possible, but not guaranteed. The Renesas deal, which anchors an anchor customer, and the U.S. policy support can make Wolfspeed a viable U.S. SiC producer if execution improves. And I just showed you they're supposed to be generating free cash flow now. That's execution improvement. Why policy plus Renesas matters? Policy tailwinds. Okay. U.S.-Japan alignment. Okay. Customer anchor. Okay. Viability versus alternative. Near-term U.S. production. Wolfspeed is the top one. Plan confirmed. Debt cut expected. Renesas anchor LTA. Long-term agreement. Execution risk on yield. Throughput. balance sheet improvement via restructuring. They just restructured it. I did this on the weekend. This is old data. Here's the other providers. So like they have to take a shot at them here. That's how I read it. They got that sick 99.99 or 4N. They got to take a shot at them. Wolfspeed is viable, but it will require more CapEx, workforce, supply chain build out. So it's not over, but like this is a really good step here. So it's going to be self-funded through free cash flow. What's free cash flow? It means there's going to be revenue. There's going to be an update here. So I'm sorry, right? I learn from my mistakes more than my wins. And this is like a pretty good loss right now. Why? We're giving back profit. So what if instead, when we first entered the stock, because it was a 2% holding for me, what if instead, when I first bought it, I told you, I know it's going into bankruptcy. I know exactly what I'm doing. I thought I knew what I was doing anyway. I was buying it over here. And then it went down a lot more. I'm like, oh no, I'm going to buy more here. So I was doing exactly what ChatGPT said. I was speculating in here. I crushed it in here. However, went back to the well. That's what got me. So what I have to be mindful of is that I don't actually know how the bankruptcy structure works. I thought I did. I thought it was priced in. I'm like, well, it's already down 99%. How much more is it going to go down? Oh, no. I was wrong. So giving back profit is different than I would have just bought it and lost money. Remember, I bought 1% before I even knew what the company did. That's me buying a starter position. I want to investigate the company. 1%. Okay. Then it went down. They announced the bankruptcy. I'm like, oh, well, let's buy more. I increased it to 3. I did that. I increased it to 3. Then I started trimming into here. Trim. Then it came all the way back down and I bought back when it was lower. I sold at 2 and 3, bought back at 1. So I did do good on that. But again, I did buy into the bankruptcy. So I knew exactly what I was buying into. A junk stock. It's going into bankruptcy. I know that. But stocks bottom on bad news. I did not fully appreciate what was happening here, apparently. So that black guy is there. And now here's the final lesson for you. If you try to be cool, man, on your motorcycle, right, your size too big, sorry, not sorry. So I'm sorry to the people who feel like they got done dirty, right? They done goofed. It's not really a mistake either. The goal here should be that if you're talking to yourself in a very negative manner, what I'm trying to do is to keep a light, short video, not a short video, but a light, fun video and tell you, here's what I'm telling myself. Why? People tend to be very hard on themselves or their worst critics. So you internalize the negativity, externalize the positivity. So if you like this talk when it was going up, maybe what you're really understanding now for the first time is maybe I don't actually understand what I'm going to regret more. Because, Justin always says, always avoid what you're going to regret more. But it sucks so bad when stocks go up. Well, usually 20, 30% overnight is like a pretty big move. And I'm like, that's a pretty big move. Well, 90% overnight. Yep. Maybe now you fully understand what the worst case scenario is. So if we go back to here, how to make a plan. Worst case scenario. I told you 1 cent. So we're buying a bankrupt company. It's going to go to 1 cent. That's literally the worst case scenario. I was still surprised though. Why? I still get surprised. Oh, I do have my last note there too. Okay, there we go. All right, here we go. Here's the Algo account. Why? It's a tricycle. How are you going to F this up? If your stop loss is 1 cent, that's your third wheel. Your job is just to push the pedal. It's not for balance. It's not for speed. Learn how to put your feet on the pedal and then push. That's it. What does that mean? Just click on buy. Just order the stock. Don't make any decisions. That's what I do. The bicycle for me, yeah, I could be happy, right? I'm happy, having a nice time. I got my helmet on here. This has discretion in my 401k. There's pockets. It's not a guarantee. There's not a stop loss. We go bareback, might get hurt. This one has discretion. With speed, which is what a bicycle gives you compared to a tricycle, or sizing, or margin, or options, can come injuries, aka accidents. Or it can be cool, man. And what are you going to do? Well, you're going to F around, find out. Right? You look real cool. Can't hear what's happening. Car might come and clip you. Looks like he's driving on the shoulder. What the F is he doing? He's going to go camping or something, right? Cool. F around, find out. Cool man looks cool, but he's less likely to be around long enough to tell the stories about how cool he is. Boring dad. Yeah, he'll be around, though. He'll be more likely to be around. So avoid what you will regret more if you're still watching. I can't tell you what to do. I'm talking myself into what I need to do. So I'll be old, but I'll still be here. So the really important part here is that you need to read what is underlined here. There's a reason why it's in here. There's only so many best practices. We always want the best case scenario to happen. And I talked about it. It was a 30-to-1 risk reward. I didn't understand how it would happen. However, if we are legitimately prepared for the worst case scenario and we take our shot and we miss, it will be very difficult to be disappointed. I took my shot and missed. Okay, whatever. Anything better than the worst case scenario, hey, I only lost 90%. I didn't lose 100. That should be palatable. That's what I tell others. So I'm trying to take my own medicine right now. And I'm trying to walk you through logically, methodically, with a plan, exactly what I am doing. I think that's what YouTube wants, maybe. So people say they want, but it's not always what they click on. So not exactly sure what the packaging on today's video will look like, but I thank you nonetheless for watching all the way until now. If you want even more, come hang out at 8:30 a.m. tomorrow for live engagement with me. I will answer any question you have. And with that said, thank you very much for tuning in. Thanks so much.